You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Hey, good morning, everyone. I am Joe Bracco. I'm head of sales for MIAX Options, and welcome to the second day of the 37th Annual Options Industry Conference. We have what we think is an exciting day lined up for you. This morning, we'll be hearing from all of the exchange leaders, as well as from some of the industry's leading entrepreneurs. We'll also hear from Thomas Petterfree and Blair Hull, two gentlemen that are clearly legends in the options space, and then end today's sessions with a special keynote from Governor Jeb Bush. And now, to introduce the Options Entrepreneurs panel, please welcome Tony Zhang, Chief Strategist at OptionsPlay.
Thank you. Good morning, and thank you for joining us for this panel this early morning. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay, and our mission at OptionsPlay is pretty simple. We're here to raise the awareness of options as an asset class for both retail and institutional advisors. We strive to build the most intuitive trading platforms and experiences for both retail and financial advisors. And we do this through three main technologies. Through our technology implementation, our education, and more importantly, our marketing resources to create customized engagements for all market participants to better understand how to create targeted options experiences for retail and financial advisors. And for this, we serve three main users: retail sell-side firms that are looking to grow their options transactions volume, wealth management firms that are looking to differentiate their practice in an environment where fees are becoming closer and closer to zero, and lastly, exchanges looking to raise the visibility of their proprietary products and awareness of options as an asset class. So we do this through a targeted precision experience of options trading through our user data that we gather from our technology resources and create customized experiences in marketing and education. So with that, I want to introduce Eric Cott, the moderator of our panel of Options Entrepreneurs.
Good morning, everybody. So I'm Eric, but I've changed my middle name to Coffee with Cott. So for those of you that are familiar with that from last year, but it's exciting, you know, to be here. I'd be remiss if I didn't first thank the OIC, the OCC, as well as MIAX, John Smolin, Doug, Tom, Dominique, Joe, the entire team. Really a phenomenal event. You know, and fortunate to have three visionaries on stage with me who are clearly helping to grow the options business in a very different way. You know, I would say unconventionally, they are helping us grow this. And you heard yesterday from many of the exchange partners about the record 5+ billion contracts. Yes, you can clap for that. That's actually something that you can clap for. So, Matt Amberson, Tony Zhang, and I'm going to get this correct, Ryan Belanger-Saleh. There we go. So I just want to start off, just to set the stage here, to read to you the definition of entrepreneurs, which Webster says, and again, giving us some context here, a person who organizes, operates a business taking on greater than normal financial risks in order to do so. So Matt Amberson, as principal and founder of ORATS, who's a great colleague, as the other two are, you know, I've known the company for many years. Matt, you know, transitioned from CBOE market making, Prior to that, he was touring the country playing volleyball, but we'll talk about that down at the Cabanas. But 17 years now, Matt, into this with ORATs. And I guess there are people in the audience right now that they are looking to transition from their existing career, what they've been doing for a long time, maybe being a little bit complacent. So I'm going to start with you by asking sort of the key to surviving and thriving and starting anew in this industry.
Yeah, thanks, Tony. And it's great to be here and be recognized. We do take financial risk to help grow the industry, and it's great to be up here. So thanks a lot for that. Yeah, I started my company, Option Research and Technology Services, ORATs, after trading on the floor. And you know, we already had some people asking for the research that we were creating. And so, you know, one of the big things that helped us is we hit the ground running. So I think that's a big thing to do is try to do entrepreneurship while you are in a company, or you know, we were already trading, and so we were building that type of the business. I think that's really the first thing. And you know, read a lot. There's so much out there. I helped edit an entrepreneur book, and you can write business plans now online. So I would say read a lot. A lot of other people have made mistakes. I'm sure all of us have on stage. Read about their mistakes before making it yourself. And then just keep trying. I mean, a lot of the products that we have now didn't exist when we started ORATs. We thought that this volatility forecasting was going to be the greatest thing since sliced bread, and now our backtesting is the biggest product that we have. Backtesting just was an ancillary product to prove out our forecasting, and now it's had a life of its own. So you got to be very flexible on what you're doing, and the technology. Now you could do so much from marketing, accounting. When you come to our website, we know who you are, and you could send automated emails back. Sorry if you're getting some of those, but and then also with the cloud, John Lothian asked me, you know, when did you start using big data? And I said, you know, he goes, you were doing big data before they even had the term. And now, back then it was so difficult. We were trying to get tick data and just storing it, and we'd have computers heating up our office. But now with the cloud, you could do so much. So, you know, really get familiar with the technology. You could look like a big company without really being a big company. So those are the things that
I'm going to use that theme, Matt, to go to Tony and talk about technology. And I'll embarrass Tony a little bit because, you know, again, maybe asking you in this way, Tony, you know, we've been around the country a lot doing things. You've also been a great supporter of the OIC and such. You know, being the youngest one on the stage with us, and I'm jealous because you look very young, you know, and that shouldn't be an obstacle. But I'm tying in obstacles that happen when, you know, OptionsPlay started. And I remember being a young broker at Mother Merrill and walking in and people who were a lot older than me looking at me and saying, "Now, maybe come back in another 15 years and I'll talk to you." So not really picking on the age thing, but the technology, which is very important, as Matt said, but some of these hindrances that occurred when you started out.
Yeah, so we started this company 6 years ago. Me and my partners, we all had financial services backgrounds, but none of us were actually in the equity options space. We all came from fixed income. I myself was from the futures and FX side. And we had nothing other than a vision, simply the fact that we saw that the options trading experience that we had at retail firms was not up to par with what we needed as traders ourselves. So we wanted to create a better experience for traders. And that's really how OptionsPlay got started. And through that process, you know, when we first started, we were really focused as a technology shop to build more intuitive tools for options trading. And, you know, one of the first conferences we came to was the OIC. That was 6 years ago, actually, and we got to experience the broadness of this market, and that's really how we were able to pivot so much from where we started to where we were today. You know, we started as just a technology company, and as we started to sell our services to the retail side, we really realized that education was also a huge part of growing this industry, and that's really kind of how our education arm got started. And as we started to grow, wealth managers, we realized that on the financial advisory side, there wasn't technology that existed for the retail side for financial advisors, and we kind of expanded into that. And now even more so on the exchange side. We never thought exchanges were ever going to be our clients, and this is all a result of coming to this specific conference and meeting these different market participants and understanding how to actually help the whole industry grow. And these are some of the transitions that we had to take at OptionsPlay to survive as a firm, but also, some of the risks that we had to take is the fact that we have such a diverse client group, that the economics of each group is so different that we also had to be very adaptive as to how we charge for our services. And I think this is actually one of the things that the industry needs to think about, not just from our perspective as entrepreneurs, but as larger firms that do business in this field, as to how do you actually go about charging for your services, because that's also evolving quite a bit. And something that's very alarming for me is the race to zero on the sell side. With firms like Robinhood offering $0 commissions, I think what we do here at OptionsPlay proves that if you build good technology and good education, people will pay for it. And I think we need to shift away from this conversation of price more towards what is the value that we actually bring to the customer, because when we do create these better experiences, people are willing to pay for that. And I think that's something that the business model of larger firms should think about how to adapt, if you will.
So I'm going to use that theme of business model as well. And for those that are keeping score, Matt, Tony, and I are channeling Tony McCormick up here. Or no, actually, Ryan is channeling Tony McCormick with the lack of socks. We're channeling other people, I think, because I always know Tony used to come up here without socks on panels. So, Ryan, talking about Try Gatsby and the name and your prior background as well. I learned today that Ryan and Mary Savoy and I are all former nutmeggers, along with Mark Longo. And those who might know, if you're from Connecticut, you're a nutmegger. So from my former days of there. But the Try Gatsby name, and then your finding and servicing clients, because I know you are now, you have a broker-dealer and such, and Tony was just talking about wealth advisors, which is near and dear to my heart. Mm-hmm. But, challenges as well. And you're fairly new. We have 6 years, we have 17 years and 14 months. So congratulations on your anniversary.
Thank you.
A little bit insight on that.
Yeah, so we actually don't have a broker-dealer yet. We're actually in the process of purchasing a broker-dealer. So for now, we are not a broker-dealer. The name is, it's not as deep as you probably think. It's the same book that we all read. But the idea behind it is sort of, Robinhood is this very egalitarian brand. It's take from the rich and give to the poor. It's kind of democratizing Wall Street. And that's not really something that we find to be in line with 2019 and in line with how people trade options. So we were looking for something a little more, catchy, but also kind of gauche, and understanding that, you make some money and don't apologize about it. The name doesn't go any deeper than that. What was the other?
So again, a little bit more about the background of the firm and your end users and your clients.
Yeah, so I actually don't come out of trading or derivatives or anything like that. I come out of the private placement space. Mm-hmm. So I was in the boutique investment banking world for a long time. I came into the options world, as did my co-founder, as a user. So we really saw this tool that was really in line with how millennials specifically like to invest. We follow the news, we're pessimistic, we like to bet against things, and for the most part, millennials don't have a lot of money and want additional leverage so they can try to move the needle with smaller account balances. By and large, what millennials end up doing in order to get that leverage is they trade crypto, or they day trade, or they buy penny stocks. And so we came at the options space basically saying there's this tool that's of a lot of value to younger investors, and somehow it's gotten a brand of being both complicated and somewhat boring. And so what we're trying to do is break the brand, strip out the jargon, and represent it in a way that's approachable to young investors and really anybody that's new to it. We think that if you're a crypto trader, you can be an options trader, given a little bit of hand-holding.
It's interesting you talk about crypto and Bitcoin and such. And Tony, I'll go to you because you were kind enough to volunteer your time to be at a program that we've done, Joe Burgoyne, my colleague who's really spearheaded this, the GAME program, which is universities. So Ryan's talking about millennials. My CEO, John Davidson, was there, Mary Savoy, really talking about millennials and where you see that growth for our industry. Because you talked about Robinhood. I know there's some colleagues here from Robinhood, and maybe that, talking about wealth advisory, but that might be the next bastion of growth. And are you seeing that with your firm, where on the retail side, and also with younger advisors, very interested in the technology and using options?
Yeah, absolutely. So one of the fastest growing segments for us in terms of options is financial advisors. I mean, you are talking
I didn't make you say that, thank you.
But you are talking about a group that manages trillions of dollars that traditionally does not utilize options in their practice. And a lot of it comes down to technology and education. When we go into a lot of these firms, wealth management firms, and we look at the technology and education they have, it's not the same that you even get for free at a TD Ameritrade or a Schwab. And this is really one of the problems that we see in the wealth management space. But this is really why a lot of these firms have embraced firms like OptionsPlay to help drive that education and technology piece for those firms. And what we're really increasingly find is that marketing plays a more and more important role in growing this asset class. As far as millennials go, a lot of the adoption that we've seen from options from a younger generation comes from creating better user experiences. And this is something that we've been trying to do for the last 6 years, is making options trading more intuitive. Because if you think of an option chain, it's like handing you a phone book and saying everything you need is in here, go and figure it out. We don't use a phone book anymore for a very good reason. We simply ask for what we're looking for, and the internet returns back to us what we're looking for. And we try to create the exact same experience for options trading. Because if you're bullish on a stock, there's no need to show you the full chain. We just show you option strategies that make sense for a bullish outlook, or vice versa if you're looking to generate income. So how do we then create tools for both the millennial and financial advisors to really allow them to utilize options in the way that they traditionally use it? So for wealth advisors, that's primarily generating income and mitigating risk. So having APIs and reports that help advisors figure out very quickly which stocks to sell cover calls on, more importantly, how to even sell cash secured puts. A strategy that we see a lot of wealth advisors aren't even familiar with, something as simple as a cash secured put. And then for millennials, a lot of them are more looking to speculate. They don't have a lot of capital. So buying calls and puts, vertical spreads, these types of strategies are more suitable for that segment of the market. And how do you actually create experiences that are targeted for this group? And those are some of the work that we do here at OptionsPlay.
I'm gonna transition, Matt, and ask you also. I should have said the GAME program is a university program through Quinnipiac, and Tony spoke there. And so this younger generation, I'll ask you, Matt, where you're out, sort of pounding the pavement and such, and speaking of the wealth advisor side, Matt, you have now registered as an RIA, I believe. Is that correct?
Yeah, that's correct.
And you and I have had good experience with Joe Malandrino, who was also at GAME as well, who's a big proponent of out there promoting the positive use of using options. So does media and other social network outreach, does that play a big part as an entrepreneur for you?
Yeah, it certainly does. And you mentioned Jill. Getting on those shows really help us get in front of people. And Tony was talking about making an easy-to-use product. That's what we've had to do as well. We've had that challenge that Tony was talking about, the options chain. And so, we've gone to just online. We're able to now pull up using the cloud and backtest strategies. So you could, without committing any capital, you could test your option strategies. And so we think of our product as much as an educational tool, and you really have to pull the people, and the sales cycle is so long. And so we try to get them in the door, get them to use the product, teach them about options. You talk about the Cirilli study. If you could get them, if you could get wealth advisors just trading for their own account, they're much more likely to then advise their their people on trading options. So that's a lot of what we're doing. Outreach, media helps a lot. And we consider ourselves what we're doing a lot of just options education day to day.
Well, you're speaking my vernacular, and I'll ask Ryan, look, we are out there educating, and research, we're very proud at OIC. A lot of you were here yesterday when Ed Zotto released a new research piece that we helped commission. And what's interesting about that is that was really targeted towards endowments. OIC released a study last year with pensions. So the challenge of institutions tends to be a longer lead time. How do you get past that?
Yeah, I mean, we are hyper retail, right? So we are working with purely retail customers.
But that's also challenging too. It does take, Matt mentioned it, there is a buildup of getting them in the door, explaining the positives and why they should be using your system, right?
Yeah, we have a take on sort of the education and learning side of things that is based on kind of how you learn an instrument, right? To play an instrument. You don't learn to play guitar by sitting down and reading a 30-minute blog about how to play guitar and then go and play guitar. You download the tabs to some Nirvana song and you play a song and and then you kind of learn other scales and songs and kind of become a guitar player. We really think that learning to trade options is very similar. So it's about, what we try to do is make the process of getting in, registering, funding your account, and making your first trade as quick as possible, ideally less than 2 minutes, and then make it sort of as likely as possible that you're going to have a good experience, and even if you lose money, you know why you lost money, and you're very aware of the mechanics of what went into that trade.
So Matt, you're out patting the pavement. I mean, you've been doing this for a long time as an entrepreneur. I know that a lot of folks realize you work with pensions and endowments and big banks, hedge funds, et cetera, as well as probably people that are sitting in their garage or basement or silo, maybe their shed. Their wife doesn't know they're going out and they're trading in their, supposedly their work shed when they're supposed to be doing repairs in the house, but they're actually trading options. As far as elaborating, on your platform and how you reach those people.
Yeah, I was just on the phone last week with a person in a family office, and we're talking about how to use a put spread caller, and we're back testing it, and you're getting the numbers right because he has to present it to his committee, and that's typical. We're on the phone, we're on screen shares, and he goes, so the call wrapped up, and what are you doing? I go down to Miami, and he goes, oh, I know a guy going to Miami. He's on the panel. I go, his name's Ryan. So I pulled up the picture of us, and he started laughing at me. And that points out a couple things. One is that the options industry is pretty small.
Most certainly.
And so we do a lot of outreach as far as I think the path to get people to accept and trade options really starts with using the data, seeing the VIX, and that's why I think a lot of the people then they get familiar with graphs of the VIX, and then they maybe use it as a technical indicator. So now they're kind of into the options a bit, and at my firm, ORATS, we're also using signals, and so that's what we try to take them and lead them. And then the next thing, like I talked about, is if you could get them to make a trade in their personal accounts, then they're much more likely to then take that into their companies. And then back testing and then Tony's visualization and making it easy to trade all helps this entire process, getting people familiar with options and learning about it, maybe with back testing, experience what a trade might look like over its lifetime. That's what we're doing on a day-to-day basis, and that's really bringing people into this industry. It's great to be recognized up here for what we do to get people into the trading.
Could you share, Matt, the transition? You said getting them in the door, and then there is some of that lead time. Where does it transition when that aha moment for certain people?
And I mentioned the technology and the marketing technology. We look at how long it takes, and you can almost see the thought process on some of these people. And, and we have a very wide range of people. You mentioned people trading in their house and all the way to pension funds. And the aha moment really comes after when they really dig in, and you could see them. We watch their behavior, and when they start really testing a strategy, and then they come back and they save that strategy, and you could see them getting it. You could see them clicking, and then they get a favorite strategy. You offer. I don't know, what do we have, 20 or 30 basic strategies, and they kind of get a favorite, something where their intuition matches, and that's where really the research comes in. So so that's what we're seeing, and that's the process that we try to take people through and help them get their favorite strategy and begin to get comfortable, get the intuition, and then they could really use options as a tool that can help their investment objectives.
You want to share a little bit about that time frame or transition? Are there situations that it happens a lot quicker?
Yeah. I mean, getting in and
Sure.
making your first trade. Yeah, I mean, the way I came to know options was through, the event where, I don't know if anybody remembers, but that United Airlines flight that 2 years ago somebody got beat up and dragged off the flight. And
I think it was United Airlines. I won't repeat the airline, but I think it was actually. Yes.
and everybody filmed it. And
That's why I don't fly them anymore. Anyway, yes.
I had actually caught that video on YouTube when it was at 400 views or something, and I was staring at at my Robinhood account and saying any 2-year-old could tell you what's going to happen to United Airlines stock in the next 24 hours, but I don't know how to short a company. So I came at the into options through that mechanism, and what I find is that a lot of the people that go from 0 to 1, having never traded to having traded once, follow that same path. It's either a product launch they don't like, or they hear a CEO say something they don't like, or just some news story or political news or macroeconomic news, and that drives them into having an idea and wanting to use that information to make a trade. And to us, options are the right tool. And so we really want to cater to the people that want to get in through that mechanism, news to a trade, via an option.
So, well, Tony, this idea of having individuals as well as advisors, folks that are familiar, this referral, that helped me a lot when I started OIC. Having people that spoke very highly about the resources that we had, the marketing, the videos, all that. Asking you about that process, because I know now you have gone over the border with our colleagues in Canada and working with them, and then some recent news about your firm working with exchanges. So that lead time as well, and it might not be a client per se that signs up with OptionsPlay, but it's the experience that allows you to talk about your platform, and maybe there's someone in the audience or in that conference that is very interested and you didn't even think about it.
Yeah, so historically speaking, the lead time has always been a factor of how large the firm or the organization that we're dealing with. But we tend to find more and more as we kind of hit our stride and really understand the value we bring to different segments of the market that we have been able to bring that lead time down quite a bit. Here at OptionsPlay, our vision or our goal is to raise the awareness of options as an asset class for participants to generate income, to mitigate risk, and to speculate with limited risk. That's our goal here at OptionsPlay, and that means different things for different participants. So for the retail sell side, this is really just to help them grow their transactional volume. For a wealth advisor, this is to help them differentiate their practice away from other firms that are where fees are being compressed. And for exchanges, this is to help them grow their proprietary products and just raise visibility of options as a whole. And we do this through three pillars, if you will. We have our technology piece, the core of our company. This is really where we built a lot of our intellectual property around, is how do we make options trading as intuitive as possible. Couple that with education, because anyone that is interested in trading options needs to be educated in into how to do it properly. And then lastly, and probably most importantly, is actually how do you actually market it correctly to the end user? Because you could have the best education and technology in the world. If your customers don't know about it, or if they don't know, they're not aware of it, then it's basically useless. So what, and this is a term that I will credit to Greg Stevens from Fidelity for saying is, historically options education and technology has really been more of a carpet bombing strategy, where you basically blast out all types of strategies, all types of technology, and you try to see what sticks. What we've discovered is that you really need to be a lot more precise, because not only these days are you competing against your competitors, you're competing against marketing from all other aspects of life. And you need to be a lot more targeted in how you actually go about targeting options as an asset class. So what we do here at OptionsPlay is we take the user data from our technology and we do predictive analytics on that user data to get an understanding as to what type of customer is this. Is this a retail investor who's primarily interested in selling covered calls and needs some more education? Or is this a sophisticated investor who needs really more advanced tools? And being able to create customized marketing experiences around that, because to nurture a customer into trading options is not something that you can do in a single webinar or a single book. It's something that we've seen takes usually 3 to 6 months to nurture a client into being comfortable with getting ready to trade a specific strategy. And this is really some of the stuff that we bring to the table. And we generally find that the larger the firm it is, the more difficult it is to align these three areas, because many times on a large firm, these three departments don't even sit in the same state. So this is really some of the thought process that we're trying to bring to the table for large firms that are really trying to impact transactional volume, is to think along all three divisions and how do you align all three of them into thinking together and working together and connecting the dots. And I'll say, some of the most rewarding work that I've done in the last year is working with a small regional broker-dealer out of New York, where we ran technology, marketing, and education for them, and we saw 500% growth in options volume in under a year. Being able to connect the dots between these three departments, and we think it's so important for large firms to think along these same lines.
Matt, picking up on the challenges that happen with firms, and Tony's talked about it, you have the ear of the exchanges and all of the folks that are in our industry. Put you on the spot. What can the industry do to make it easier for you? And then I'll put the other gentleman on the spot as well.
No, well, this is great, helping with outreach. I think it's really interesting the way we're talking, and how long it really takes to educate these people. So we could help. We could participate with you and with other firms and help them, align what we're doing, really education and selling our product, with the goals of the industry, educating and getting more users. So that's one, just to include us in some of these things like we're doing today. Another one, market data fees. That has to be more rational. I mean, I get calls from people and they're saying, hey, we want to start this company, we want to use your data, but these market data fees are crazy. If we can make that more rational, where a startup doesn't have to pay so much, like as much as a other company, it would really, I think, pay off for the industry. I know it's going to initially hurt, but I think longer term, really getting a more rational approach to market data fees would really help. And I think thirdly, getting more liquidity in the smaller names, and we're starting to see that actually. When we back test, we have these assumptions, slippage and all that, and the markets for some of these thinly traded names, and you say you hear a news story, you want to trade something. Well, you're paying such a wide spread, but if we could find some way to get more market makers participating in some of the smaller stocks, and I know Henry Schwartz will probably talk about that a bit.
Probably.
But, those three things could really help our process, and I think help the industry at large.
Well said. Brian.
Yeah, so I certainly agree about market data. I think the market data pricing structure is just antiquated in many cases. Generally speaking, when I talk to other, entrepreneurs in the financial technology space, they tend to gripe about, regulation effectively. I actually don't find that to be a burden. Through many industries, there's regulation, and the financial services industry doesn't tend to be any more onerous than any other. What I find to be the thing that is most antiquated and thus the most sort of hindrance on growing a new business is the sort of back office technology stuff. Basically the APIs that are exposed to a small company that has a limited development budget, that doesn't have the time to kind of hash through a million different services and try to piece things together and use a whole bunch of different interfaces. And I think that's changing very rapidly, but over the course of the next few years, I think you're going to see a lot of these sort of back-end services consolidated into single interfaces and single endpoints that you can hit and do what you have to do. Especially as a regulated firm, it's very difficult to get your head around all the disparate pieces of technology that you need to include to operate.
Tony, would you agree with the liquidity theme? And you have the ears of the industry here, so I'm putting you on the spot.
So the liquidity thing, I think, is more of a problem on the retail side from the perspective of there's no transparency for the retail. They only see what they see on the screens, and sometimes what they see on the screens is very, very wide. Even though there's plenty of liquidity if they actually interacted with the markets, but for the retail, they don't have the transparency that some of the institutional players do. So when they see an option that's trading at 50 cents by $1, they're not even bothering to try to interact with that. So I certainly think that is one of the problems that we're trying to solve here on the retail side, is how do we take technology that exists in this industry on the institutional side and bring it to the retail facing customers and bring more transparency into letting them know that they can interact inside the quote and they can get filled inside the quote. So those are some of the problems that we're trying to solve here. As far as what you were saying before, I do second the market data costs thing as well. However, I do think that one of the huge benefits that we've gotten from this industry is this conference. This is one of the only places that we actually get to speak to all of these different market participants and actually think about how to create innovative technologies outside of just what we can bring to the table, but how do we connect the dots between other market participants. And that's really some of the value that we get out of this conference. And from what can the industry do more, is I would love to see events like this happen more often, or events where market participants like technology providers and sell side and buy side and clearing and market makers all think together, because sometimes we talk about the same problems every single year, yet we don't really seem to be able to make a lot of progress on that. So we would love to be able to just have more time with everyone here in this room and talk about how do we actually solve some of these problems.
So you're asking for an OIC conference every quarter?
Yes.
Which actually could maybe happen, and probably doing it overseas. We've talked about that backstage, that maybe we expand this out overseas. Hope everybody has their passports ready.
Or smaller local events.
Local events, sure.
I think is very useful.
Matt, you have experience from being on the floor. There were times probably that you looked at certain trades, you had to leverage things, and concern about risk. As that translates to an entrepreneur, have you turned clients away?
Yeah, I mean, it's tough to look at your P&L, look at your cash in your bank,
quantify and say, I've got kids in school.
No, but that's a great point. Is sometimes a customer that's coming in is going to cost you more than you're going to make on that client. I'm sure it happens in advising as well. And I'm very guilty of wanting to make things to fix people's problems, but it doesn't make a whole lot of business sense. So I could be better at doing that. I mean, I think we're all kind of technology guys up here, and we love solving problems. But one thing is, many of you know out sitting and watching, you have to turn away with these paying clients and do that early, but it's very difficult to do.
You talked about the Small World story where it connected you and Ryan before you even knew each other coming down here. are there situations where you have shared with OptionsPlay, with Tony, maybe a client situation, or with others that are here, that has just, because there's a lot of collaboration, we're all on the same playing field?
Yeah, we talk with entrepreneur companies all the time. And some of my best clients come from introductions made. Trade Alert, Henry's here, Derivix is here. There's just so many that we deal with, and that's where we really learn. And I'm learning just being on this panel about some of the marketing techniques. And so, yeah, we definitely share. We share information and experiences, and it's kind of a scratch your back, I'll scratch mine, or however that saying goes. But you really want to work with other companies and talk, and that's the good point about all getting together and sharing stories and concerns and things. It really will help your business, and that's been, for my company, ORATS, that's really helped us a lot.
So we're right at about 5 minutes, so I want to clearly allow all three of you with some closing comments, but bringing this all together, we're talking about collaboration and the importance of this conference, because it really brings the best minds and the ideas together, where everybody's working and traveling and doing so many things all the time, that the opportunity and why this conference is so important, because it's getting in front of each other and forming new relationships. And at the end of the day, we all have really the same goal, which is driving more volume and educating people, because we believe in the option industry. And there's so many more people to reach. So just at about 4 minutes, and if I don't keep on time, then my friends at SIBO won't invite me next year to be on a panel. So I'm putting in a little subliminal note there to be invited for next year. So I'm going to stay on schedule here. I'll start with you, Tony, and we'll watch the clock here. We're going to keep it within. So just a minute or so with some closing comment.
Yeah, so, again, this conference has really been the key of the evolution of OptionsPlay to everything from how we've pivoted our products away from just technology into really more professional services for all firms to help them grow their options business has been a huge impact on it. I thank you, Eric, thank you, MIAX, and this conference for having us for the last 6 years. We wouldn't be here if it wasn't for this specific conference, especially up here. It's been a really rewarding journey for us, and it was exciting and scary at the same time, but definitely one of the best things I've ever done.
Perfect. Matt, watching the clock.
Yeah, no, it's great that we're finally recognizing the role that entrepreneurs play. And like I said, we're out there every day talking, educating. And so I really like to thank John Smolin specifically and the industry and this event for getting us up here. I've devoted much of my professional life to options and want to see it succeed. And it's great that we're getting recognized, and just speaking for a lot of the other entrepreneurs out there. Thanks for the opportunity to come and talk about entrepreneurship and how it positively affects the industry.
Well, I appreciate you mentioned this, really studying the research, and both of you, a lot of the kudos that go out to the industry and our organization with OCC and OIC. And Ryan?
Yeah, so this is my first OIC, my first.
Glad you're here.
So on top of getting my head around the sort of hard partying nature of the conference, which has been fun, it blows my mind. We have a lot of options people on our cap table and as advisors and as employees of the company. It blows my mind how small this industry really is and how much just everybody knows everybody. And I'm very much realizing that these conferences are a big part of that, and it's been endlessly helpful to us.
And I'm going to just mention that MIAX designed this panel, which we'd all probably agree, sitting through this past hour, how beneficial it is to have an entrepreneurial vision of what's going on. There are a lot of changes going on in the industry. When I started 10 years ago, and I feel very blessed, there were 7 exchanges. We're now at 16. I'm going to let Henry Schwartz deal with the number of exchanges and where that goes. But the fact is, we are adding more diversity to the agenda and the discussion that is really valuable to this industry. here we talked about millennials. We're touching upon technology, which is so important. Some of the challenges that a lot of you face transitioning from what was a sell-side career to then going into buy-side and integrating the wealth advisor space, as I said, which is near and dear to my heart. So maybe the four of us would challenge all of you out there to think a little bit more about the ways that they can help you, the ways that OIC can help you, and the exchanges as well. We're repeating again this $5+ billion contracts that we cleared. A lot of it is due to all of the work that we all do together collectively. And I believe that, again, there's a lot more retail, institutional advisory that are waiting for us to get in front of them. So with that, I would like all of us to really give a great round of applause to these three gentlemen, because I think they did a spectacular job. And I believe we are going to turn it over to Mr. Schwartz.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.